Welcome back, and joining me for a look at the equity space is Mutooni from Sanlam Investments. Thank you so much for your time, Roy. It looks like actually this week was going to be better for markets after, for example, the Nasdaq and the S&P 500 had their worst week this year last week. There was a rebound yesterday, but now seeming, they're still in the green, but seeming that, I don't know, there's like a little bit of unsureness there with the markets. What are you making of a sentiment? Are they just waiting for, significant catalysts which might be starting to come tomorrow?
Well, the thing is, the thing about the markets right now is that there's a big step change that we're all expecting, which is this rate cutting cycle. There's the sentiment around that rate cutting cycle. Is it going to be happening at a time when growth is soft, or when growth is going backwards, which is a recession? And we're only going to know this from the data as it comes through. So we've got the inflation print that should come out tomorrow. That should go a long way in terms of confirming that rate cuts are coming, but it's very unclear to the market whether it's already too late, or whether the Fed is ahead of the game. So I think you'll see the markets being very edgy until we get certainty there. Remember, US markets have rallied quite significantly. The multiples may not be demanding in aggregate, but they've rallied for a long time. So people are really scared that we could be due a significant pullback.
Well, just talking about the game, China seeming to, of course, for the longest time not be winning with investors in terms of the economic outlook. They released their trade data today. We did have exports actually surprising to the upside, but we did see missed expectations there on imports. Just talk to me about the story that we're seeing here.
So I think when you see Chinese exports growing strongly, I think that's more a reflection of weak domestic demand, which is a confirmation of the trend line that we've seen since post-COVID. There's very soft demand. You have deflation there. People aren't spending. They're saving more. And they're not going out. The consumer confidence is relatively weak. There's excess capacity in that economy. The government's trying to stimulate it, but they're pointing in what I would say is a very ineffectual way. What you actually need to do is encourage people to spend. Why are they not spending? It's because they're not very confident about the future. Most of their wealth is probably tied into that residential market, which has just cratered and tanked for the past couple of years, and there doesn't seem to be any way out of that debt-driven morass. So that's the problem with China. One of the solutions that the government tried to do was grow export capacity and try and export itself out of trouble. But remember, again, it goes back to what I was saying before. The only consumer out there that has any strength is the US consumer. If that one starts slowing down, no amount of exports from China is going to save the world. And actually, you'll see that China will struggle to export because there's not much demand globally. So they're caught in this very difficult place. They always wanted to convert themselves from being the manufacturer of the world to actually being self-driven by consumption internally, but that hasn't quite happened, and that continues to be a disappointment.
Well, let's go to the other side of the spectrum when it comes to spending, because here in South Africa, particularly in Joburg, people are spending at Mall of Africa and in the broader Waterfall City precinct. There, of course, ATAC coming out with their results today. Dividend and their distributable income per share up 19%, also reducing their gearing there. We did see that share price climbing more than 6%. Is this just highlighting the solid foundation that ATAC has built here?
Well, I think you have to also consider that there was a bit of fair value gains in the number that exaggerated the number a little bit. But exactly like you say, collections are up, the occupancies are up as well. I think this sector seems to be one that has settled and come out of the post-COVID downturn and is going strong. It's particularly driven by retailers, as you rightly pointed out. And that level of growth in terms of distributable income is always encouraging. So I think it's more positive times ahead for the property sector, and ATAC is one of those developers that will continue to benefit from increased vibrancy in the market, particularly if interest rates start to decrease. decline domestically.
Talking about spending, let's go into food. Lipstar also out with interim results today. We did see revenue there ticking up more than 5%, and then their HEPS up by double digits. Talk to me about how this food producer managed during this interim period.
So this is a business that's been undergoing some significant restructuring. During this results, they announced the disposal of a couple of businesses and the restructuring of their divisions into two main big divisions. The result was acceptable. It was okay, and you saw the share price reacting positively.
Yes.
But I think the disappointing thing is a very weak revenue growth, and most of that revenue growth was driven by pricing rather than volumes. Just again pointing to the weakness in the general consumer economy and also the intense competition there is, plus the strength of the retailers there. So I think they've put one foot forward in their restructuring. They seem to be getting some fruits. It's a little bit slow, but they're going in the right direction.
All right. Well, let's get to your stock pick for today. Roy, what are you chewing on?
So it's interesting. I pick Rhodes, which is basically RFG Foods, the previous Rhodes Food Group. This is one, it's a small cap, probably ignored by most people, but they've gone through a big restructuring over the past few years, and they've become quite strong in their core business, which is basically within manufactured food space. They supply Woolies, they supply they supply all of the retailers, and they've actually started getting to be number one in a lot of their products, like long life juice and that sort. What's interesting about them is 35% of their production goes into the informal market, and they've started growing volumes internationally and regionally as well. So I think this is one that has some good volume growth throughput that's coming through over the next few years. It's not particularly expensive. It's not very well researched. It's definitely a gem that I think every investor should start looking at, particularly now when inflation is coming down, which tends to bring power back to the food manufacturers and away from the retailers.
All right.
Bless you, Zinati.
Thank you. It was a very silent sneeze there. Thank you so much for your time and for your insights today, Roy. Much appreciated. That was Roy Mutooni from Sanlam Investments.